Hey guys, Ken here from Think Trade Profit. I want to share with you 4 things that you should stop doing if you want to make more money while trading on Robinhood. The first thing that you should stop doing is stop using only your mobile phone. I know the app is easy, it makes it really convenient to enter and exit trades, but you need more than that. You need an alternate source of quotes. The quotes on Robinhood sometimes get delayed in fast markets. You put in limit orders, they don't get filled, and you wonder why. It's because the quotes are off. They're delayed. They're not very good all the time. The second thing is the charting. The charting that they offer, it's nice because it's on a phone, but it's not enough. You need some technical analysis tools. You need sometimes longer time frames and that kind of thing. You need a bigger picture. So stop using just your phone. I suggest tradingview.com. Tradingview.com. They have great charts. It's free. And they have live quotes from the BATS exchange for the markets, and they're pretty good. I've used them alongside Active Trader Pro from Fidelity, and they keep up real time in fast markets. So it's not exactly the national best bid, best offer, but it's very close, and at least they're up to date. They're real time. But again, it's just the BATS exchange. If you don't know what I mean, look up level 2 quotes. You'll understand that the real time quotes are made up of different market makers and then your orders and that kind of thing. And they're constantly jockeying for position and on bids and offers. But the BATS quotes on tradingview.com are very good. So stop using just your mobile phone. The second thing you should do is stop trading so big. So what do I mean here? It's your position sizing and your risk. Honestly, 5%, risking 5% on any trade, no matter what size your account, is probably the maximum I would even consider. And even that's probably too high for most of you. Risking 5% of your account on a trade, it's still way too heavy. And the reason it's heavy, the reason that's too much, let's say you have a methodology where you pick 60% winners and 40% losers. That's very good. You will make money in the long run. There is no doubt, depending, as long as you appropriately size your wins and losses. But with a 40% losing rate, there is a very good chance in a string of 100 trades, you are going to lose 5 trades in a row. So I know it's hard to conceive, but it happens. If you want to do the math on these kind of things, basically you take your losing percentage, take it to the 4th power or the 5th power, see what number you get out. If you take 40%, 0.40 to the 5th power, I think it comes out to about 1%. That means there's a 1% chance that you could lose 5 trades in a row. So in a string of 100 trades, there's a high probability that you're going to lose 5 trades in a row. If your winning percentage is worse than that, then you're going to have bigger losing streaks. 4 and 5 trade losing streaks are going to happen. It's going to happen during your trading career. If your career's composed of hundreds or thousands of trades, you have to be ready for this. And the thing is, when you're risking 5% of your account on a trade and you lose 5 in a row, that's a quarter of your account or 25% of your account. It's a big hit. It's a big trough to dig out of mentally, and it may rattle you. So 5% is the absolute maximum, and you really should be seasoned, have good records, know what your win and loss rate is, and that kind of thing. More realistic, and the common advice you'll hear is about 2% of your account per trade. So stop trading so big. The third thing you should stop doing if you're trading on Robinhood is stop trading the news. I know it's exciting, there's earnings, there's big moves in these stocks, but I don't know anyone who made a successful career out of trading the news. I'm not saying people haven't got lucky and they've caught the right side, but it's not something you can bank on. It's not something that you want to base your trading career on. And that includes earnings reports. They're complicated. Even if you were a master accountant and you followed the financials of the company and the sector and everything, things that happen on those earnings calls you can't predict. They may blow it out. They may blow out earnings. It's better than expected. The company's doing great. But all it takes is one person on an earnings call to say, well, the sector looks soft next quarter. They say something like that, and the reaction in the market can be completely different, even though they beat earnings and they beat the expectations of every analyst on the street. Other things can be said that just totally destroy the move that you were hoping to catch. So don't gamble on it. So that includes earnings, economic reports, FOMC, interest rate adjustments, all that stuff. Don't trade news. The fourth thing that you should stop doing is putting trades out there that you don't have good notes on. Basically, what I'm asking you to do here is record all your trades and take notes and be honest with yourself. I know you're going to do things, you're going to break some of these rules I already mentioned, and you're going to have some big winners. And then your account's going to be at 50% in 6 months, and you're going to think you're amazing. But the truth is, hey, I'm glad you made money, I'm glad you got lucky. But if you had notes for that trade and you were honest with yourself, when you review whatever time period, 6 months, a year, you'll know where your profits really came from. And if you broke the rules, you need to know that. You need to be honest with yourself and be objective so that you can fix these mistakes so you can survive for the long haul. So good records for trades are obviously price, time in the trade, in and out, what kind of risk you have, what kind of stop loss you had. Over time, as you collect these, you're going to be able to determine what your win percentage is, what your loss percentage is, if you stay consistent with your methodology. And you're going to have notes for when you break it. So that's where you can look back at these and say, okay, I did okay for the first quarter of 2019, but I made mistakes here, here, and here. I let the loser run, or I doubled down on my position, it happened to come back. All that stuff, you need to have kind of an objective view of what you did historically so you can fix it and do the right thing. So stop just throwing trades out there and not keeping track of them and recording them. It's a big deal. If you don't have 200 recorded trades under your belt, you don't have anything that's even statistically valid. So if you don't have 200 trades that are recorded, I don't care how much money you've made in your account, you're still a beginner, because you can't you can't show me how you manage your risk historically. And really, that's what matters. If you want to grow, you want to survive, you want your account to grow, and maybe you want to raise money in the future so you can manage it, those are the kind of things you're going to have to present to raise money. They're not going to care how much you made. Oh, I made 12% 2019, 20% 2020. They're also going to say, well, let's see your worst drawdown, and that kind of thing. So you're going to have to demonstrate how you manage risk. And there's plenty of people out there, even on the internet and on YouTube right now, that are selling systems and all that stuff, and they're failed traders in real life, and they're just selling systems because they got lucky and they got popular, and yeah, they're making a bunch of money, but they're not trading. There's some really good examples of those kind of people. They would never raise money because they were too wild and they didn't manage their risk. So that's it for that. The four things to stop doing is stop using just your phone. Get an alternate source of quotes and charts and use it. Stop trading too big. Stop trading news. And stop throwing trades out there that you don't have good notes on. Record your trades. So I hope this is helpful. Don't forget to hit like and subscribe below, and you'll be notified when I send out my next video. But good luck out there. I wish you the best in profits. Thanks.